Hello, good morning and welcome to this brand new edition of the newspaper show right here on ET Now. I'm Cheryl D'Souza and I'll take you through the top headlines and stories on Economic Times as well as on the Times of India. So let's get going with the top 10 headlines on the Economic Times. Prime Minister Narendra Modi extends the free ration scheme right up till end of November. Moving on to the fiscal deficit. Fiscal deficit is at 58.6% of the target in the first 2 months of FY21. Moving on, core sector shrinks at a slower pace. You have Fitch that's lowered FY22 outlook for India. Government panel to probe Chinese apps' data practices. Tata Sons may infuse funds into Europe's steel business. Coal minister says that the coal sale without string in 5 years. Swine flu with pandemic potential found in China. This is what the Chinese scientists spoke about yesterday. EU reopens borders to 15 nations, but US has been excluded into it. And Favipiravir is yet to convince ICMR. Moving on now to the top 5 headlines on the markets page in the Economic Times for you. With no tax, MNCs ramp up dividends. Moving on to Wall Street, they pared their gains amid thin volume in yesterday's trading session. April to May dip in bank loans less than FY20s. You have COVID-19 adds 23% to banks' provisions for Q4. And lastly, stamp duty to pinch liquid fund returns. From markets now to corporate headlines as they're on the Economic Times. First up is SBG Cleantech taps Brookfield for funding. You have HOL that's mulling options to replace China sourcing. An ET Now Newsbreak confirmed JSPL arm to sell stake in Oman asset. You have SBI that will hire 2,000 to grow rural fee-based operations. And lastly, Dr. Reddy's in talks to get flu drug license. Alright, and those are the top headlines as they're on the Economic Times on the markets as well as corporate front for you. But let's shift focus now to a top story that's there on the Times of India page 15, and that is the Times business page. And this is a story that I'm going to talk about, or rather my colleague Varun is going to talk about, and that is SBI General and Premji firm may acquire future Generali. So to talk more on that, Varun is joining us on the phone line. Good morning, Varun. Take us through the story that's there on the Times of India, page 15.
Good morning, Cheryl. So there seems to be some M&A activity in the offing for Future Generali. Now, just a little bit about Future Generali. It's at 3,600 crore AUM, so around $500 million. Now, obviously, because of Future Retail, which is the owner of this company, and all the problems which are happening in the Kishore Biani group companies, Reliance might be buying Future Retail. So even Future Generali has to be sold as part of this to generate some capital. So two bidders, SBI General and Premji. Now, Aziz Premji's insurance arm is $2.5 billion. So it's 5 times the size of Generali. And he also has 16% share in SBI Gen. So what can happen is potentially both these guys could jointly pick this one up. And then later, at some stage, they can see how to align their interests via merger, etc., if it is appropriate. But for now, it seems like these are the two strong bidders. SBI General needs no introduction, and Premji for Future Generali.
All right, Varun, thank you for joining us in the morning and giving us an update on that particular story that's there on Times of India page. That is SBI General and Premji firm may acquire Future Generali. But let's shift focus to another story that's there on Times of India page 15, and that is home loans and credit card debt slump in April and May. So this is the story that I'm talking about. To talk more on that, bank loans to individuals under the personal segment shrunk by about 74,790 crore rupees in April and May, driven by a sharp drop in credit card outstanding and a decline in loans against fixed deposit. The bank advances to the services sector and industry also recorded a sharp drop. So this is a story that is there on in Times of India for you. That is home loans and credit card debt slump in April and May. Well, let's shift focus now to some corporate news is there on the Economic Times, and this time around is about HUL. They held their AGM yesterday, and the company is saying that it has started to look at alternatives to sourcing from China and the border tensions between the two countries. Vinny is here to take us through the highlights of the HUL AGM, and particularly this particular piece of information coming out of the AGM. Vinny, take it away.
Anti-China sentiments are running up high in the country, and there are calls for banning Chinese products. Especially even the government has given directive restrictions for investments by Chinese companies in public sector firms. Also, they have banned 59 Chinese apps in the country at the beginning of this week. Now, looking at this current geopolitical tension between the India and China, HUL, which is one of the biggest FMCG companies, in its 87th annual general meeting, the chairman said that they will also be looking to replace the raw materials and the packing material which they import from China, maybe to locally source these products. Currently, they do have imports of around 429 crores from China, and Sanjeev Mehta said that they have an absolutely clear strategy, and they have started working on a strategy to find alternative sources for these raw materials as well as packing materials. He said that they agree absolutely with Narendra Modi on becoming vocal for local, and that is why also they will be looking at getting all their products from local sources as well as manufacturing from local sources as well. And they currently have 99% of the products which are manufactured from locally in India, but that 1% which is remaining, that also they are trying to find alternative sourcing from domestic market, or maybe they themselves will manufacture. They are looking at some strategy over there, and this is why currently they do have imports of around 11,572 crores, which is worth of they have raw materials, which is worth 11,572 crores, and out of that 429 crores is from China. Also, they have a People's Bank of China holds around 0.33% in the company, that is 1,588 crore in the company. So that is why they are looking at some sourcing to avoid Chinese imports for the company, as well as they said that the government should take any step required to avoid people from calling products from China. So let's see how actually HUL manages to replace its Chinese sourcing materials.
All right, thank you, Vinny, for getting us that piece of information. Now, from page 4 of the Economic Times to page 5 of Economic Times, and this is the story that is Tata Sons may back its foreign steel business. What is the story? What is it exactly talking about? I'm joined by my colleague Vivek to take us through this important story that's there on the Economic Times. Vivek, good morning. What is Tata Sons actually planning to do this time around?
Well, good morning. So what exactly has happened is that given the impact of the pandemic, as well as, a lot of operational troubles that Tata Steel units in Europe have been facing. So we're talking about both the British as well as the Dutch units of Tata Steel. And, very clearly Tata Steel had gone ahead and requested the UK government for funding of close to £500 billion. However, according to what the ET is reporting, it appears as though of the total £500 million sought, most likely Tata Steel would not get more than one-fifth. That is, according to ET, they wouldn't get anything more than £100 million. So what they're saying is that Tata Sons could go ahead and step in to fund the shortfall. So £400 million is what Tata Sons could infuse into a combined British as well as the Dutch unit. So it'll be interesting to see how other Tata Group stocks react in trade, and especially how Tata Steel would react in trade, given the fact that it could get some long-term financing from the parent entity.
All right, thank you, Vivek, for taking us through that story that's there on the Economic Times. But let's shift focus from corporate headlines to economic headlines. And on economic front, you had the fiscal deficit data for April and May come in yesterday. Along with that, you had a core sector data as well. Poonam is standing by to take us through the highlights of both those important data points. Poonam, good morning and take it away.
Well, certainly we are seeing some early signs in terms of pickup in terms of the economic activity. The May core sector data contraction has declined to nearly around 23% contraction. This is versus a contraction of close to around 37% in the month of April. Nearly all the sectors contracted other than the fertilizer sector. We did see the contraction coming in steel, cement, electricity, coal output, refinery products. But the silver lining is that the fertilizer output did improve or did gain nearly around slightly over than the 7% thus stating that yes, there is some amount of decline in terms of the contraction. The economic activity is picking up slightly slowly, but the fertilizer output being positive does indicate that yes, there is an element of improvement in terms of the rural economy there and rural demand there, which is of course another silver lining. If you look at the overall high frequency indicators also, we are seeing some amount of improvement. Maruti sales data was also better in the month of May versus an abysmal nothing in terms of the previous month. In terms of the fiscal deficit also, fiscal deficit of course it's too early days to judge the fiscal deficit, but yes, we are seeing very slower or lower tax revenues, lower non-tax revenues and higher capex there, and as a result we are seeing the fiscal deficit during April to May is nearly around 59% of the target.
Thank you for taking us through those two important macro data points, the fiscal deficit as well as the core sector data. Well, let's shift focus now to a story that's there on the ET markets page, and this is the story that my colleague Pankaj is joining in to talk about, and that is COVID adds 23% to banks' provision for Q4 loan loss. This is a report by an ET intelligence group. To take us more through the highlights of this particular report, Pankaj is joining in. Pankaj, good morning. Take us through what this particular report is saying.
So Indian banks have set aside almost about 13,500 crores in terms of total provisioning towards moratorium as well as deferred related payment for COVID-19. This has happened in the March 20, that is the quarter that is just ending, or rather just ended. This raised the total loan loss provision in Q4 by greater than about 30%. Or sorry, 25% to about 73,000 odd crores, which was about 15.8% lower a year ago. COVID provisioning was 18.5% of the total loan loss provisioning. This is for January to March quarter. And in the absence of it, the loan loss would have been close to about 60,000 crores. And that's how you get that 13,600 crore number that they have set aside.
All right, Pankaj, thank you for taking us through the findings of the ET Intelligence Group report. But let's shift focus now to a story that's there on the page 8 of Economic Times, and that is about SBI. They will hire about 2,000 to grow their rural and fee-based operations. The focus will be on junior and mid-level executives. Besides replacement, 400 will be for banks' new financial inclusion vertical. This is as per senior official of the bank. So definitely some good news coming around when it comes towards hiring. So SBI Group would be hiring about 2,000 junior and mid-level executives in the next 6 months, as it looks to capitalize on the potential to grow rural lending and fee-based businesses when you see peers are being held back by the risks posed by COVID-19 on incomes. That is as per two people who are familiar with the plan. So as per sources to Economic Times, SBI will hire about 2,000 to grow their rural and fee-based operations, and the focus will be on junior and mid-level executives. But let's shift focus now from page 8 right up to page 1 of the Economic Times, and give me a moment while I flip the page for you. And this is with regards to what is happening with the Chinese applications. And here you go. This is the story, front page of the Economic Times that I'm going to talk about, and that is top-level government panel to probe data practices of Chinese applications. 48-hour deadline from issue of the notice. Officials from the MHA, MeitY, INB and law ministries to be part of the panel along with a CRT in chief. The meeting is likely today. The app firms say they are ready to cooperate. So the panel is likely to meet today. They will probe data sharing practices of these Chinese applications. What the government is saying that they've evoked an emergency powers as there was a threat of espionage. Their officials are also confident the ban order will stand legal scrutiny. Meanwhile, what the apps are saying, they're saying many apps such as TikTok go offline. Executive from apps say they will cooperate with a government. So this is a big headline that is coming in, that the top level government panel to probe data practices of the Chinese applications. Also, the representatives of the 59 Chinese applications that are banned in India can appear before a government constituted committee within 48 hours of the announcement to prove that the data of the Indian users are not being sent to the servers in China. This is as per government officials to Economic Times. So an important development to keep your eyes out on. Now let's shift focus to the top 5 headlines that we have in the Times of India for you this morning. And first up, you have on the COVID-19 and the update around it. India records 4 lakh cases, 12,000 deaths in the month of June. This is the top headline coming in on the Times of India on COVID-19 front. Moving on, second highest daily deaths in Maharashtra has been recorded. Mumbai has best air day in at least 5 years. Country gets its wettest June in 12 years. And lastly, SBI General and Premji firm may buy futures generally.